Well, hello guys. So I'm gonna be analyzing a few pairs this night. I'm gonna be analyzing pre-London. This is the euro dollar pair, and for starters, the first thing I'm doing right now is I'm in 4 hour time frame trying to understand market structure. And the first thing I'm seeing right now is how price made a chalk, a change of character, and now we're in a retracement, in a correction all the way to a supply zone. So I marked my range, my swing high, swing low. I'm gonna be trading this. So once I analyze my two zone, my range that I'm gonna be operating, I went straight down to 15 minutes. And the first thing I did was, well, if price wants to reach price over here, you would have to buy the price. So that's exactly what I did here. I analyzed how in 15 minutes, the price in the euro dollar did a change of character, followed by a break of structure, giving me another confirmation that price wants to go up, wants to go in uptrend. So for the euro dollar, I would be waiting for price to retrace 50% of this wick right here and give me the reversal that I need. And my entry would be about 50% of this wick, because remember, wicks are just candlesticks in lower time frames. So I would put my entry here, and I'll put 7 pips of stop loss, and my take profit, I'll put it to 1 to 5, and there you go. That's my first entry for the euro dollar. Now for the end for the New Zealand dollar, my analysis is in the 4 hour time frame. We see how the range is my swing high, my swing low is from here to here. Therefore, meaning I'm still in an uptrend, and price already finishes correction. Now we're doing an impulse to the up. So the correct thing would be to take buys until price can liquidate this high. Because remember, the liquidity is from all the swing highs and all the swing lows. So that's exactly what I analyzed. So I will be going down to 15 minutes. And for price at 15 minutes, the way it's moving is price initially gave me a break of structure and gave me an internal break of structure, sorry. And that gave me an external break of structure, followed by a trend line of liquidity, followed by my extreme order block, which has all my confirmations because it has acceleration, it has the imbalance, it also has the liquidity and the acceleration. And we're also trading in favor of the market. So that's where I would be looking at. For buys, I would be taking buys from this zone right here. I would be placing about 4.9 pips of stop loss, putting my take profit to its high, putting it to 1 to 5. That would be my entry. So price would most likely come down, take out the liquidity, mitigate the order block, filling in the imbalance, and then immediately reversing up and hitting me with take profit. That's my entry for the ends for the New Zealand dollar. For the Australian dollar though, I was analyzing 4 hours at the moment. I just started analyzing it, and I saw how Price had given me a break of structure internally and externally, followed by price mitigated a demand zone of 4 hours, and now we're in the impulsive stage. So it means that we can start buying until price takes out its high, and then we'll see what can we do from there. But right now, price is in the uptrend. It gave me a break of structure. When it gave me the break of structure, it gave me a correction. Now we're in the impulsive phase, so the correct thing will be to buy, not sell. Now in 15 minutes, I went down to 15 minutes to see what price would be doing, how it would be, reacting and all that. And so price gave me a break obstructor here because this was my last low, my last high, and then this was the last low formed, and then high took out this high, and it broke with a body, meaning if the candlestick breaks with a body, it means that it's confirming that the trend is strong. Instead of it breaking with a wick, it broke with a body, so it confirms me, that the trend is stronger. So it means that the buyers are taking power in the market. So for now, right, the order blocks that I have chosen so far are this one right here, is this one right here, the extreme zone. This is my first order block of demand because it has the acceleration, it has the imbalance, it has the break obstructor, it has the liquidity, it has all my confirmations, and we're not operating against the market. We're in the correct direction, just to take buys, so we're all good. So that would be one zone that I would definitely take. And if we throw the Fibonacci, um, throw it to the high, you can see how anything below this is nowhere near good to take an entry. Because remember, we want to buy when it's low, not buy when the price is high. So this would be probably the only entry I would be taking in the Australian dollar. I would be pushing for buys. I would be pushing for buys, and I would probably put right now, like about 4.5 stop loss, and I would take my take profit to the next zone of supply, which gives me a 1 to 6 ratio. That's pretty much it. I think these are the four pairs that I would be analyzing: the euro dollar, the NCD, New Zealand dollar, and the Australian dollar. And if we check the DXY, guys, I'll give you a good tip. If we check the DXY, we can see how the price is in a downtrend. And whatever the DXY tells you, the DXY is an index of the dollar, meaning any pair that has the dollar in it, for instance, the euro dollar, New Zealand, Australian dollar, all those pairs are going to be the opposite of what the DXY tells you. So if market structure is going down in the DXY, it means that all these pairs are going to be up. They're going to be in an uptrend. You see? So that's just a trick, guys. So you can keep that in mind. That's pretty much it for tonight. Pre-London, we're going to be active, trading, see what happens. All right, then have a good one. Subscribe, and I hope you enjoy the video.